I think we have our next management ready with us. Nigel.
All right, well, let's move on then. Let's talk about Tega Industries. Well, the stock post-listing has done very, very well. But in the last few days from the recent high, it's come off a little bit. The first quarter was rather weak, but what's the way on from here? Well, we have Mr. Mehul Mohanka, the managing director as well as the chief executive officer at the company, joins us on the show. Hi, Mehul. Thanks so much for joining. Good to see you after a while. Well, let's focus on a couple of aspects. You've done some inorganic growth on that McNally acquisition, 165 crores, 100 crores of debt, I think 65 crores of equity. How do you see that asset shaping up? What revenues did it do in the past year? And what kind of growth and margin trajectory do you have only on this asset?
Sure. On McNally, as you know, we got the NCLT order approval in end February of 2023. And since then, we've been quite busy and occupied in integrating the asset and realizing the value that is to come through the acquisition. So in the full year, last year of FY 22-23, McNally Sayaji did 185 crores in top line. And we are estimating a 15% growth over FY 24 from where it ended last year.
And what about the margin trajectory on this asset itself? It's a little bit lower in comparison to what you're already doing. But if you could tell us more.
Yeah. So on the margin side, on EBITDA, operating EBITDA, McNally is at about, they did last year about 8%. We look at with a healthy mix of increase in order book margins, as well as on the spares business to push it up to close to 11 to 12% in FY24 in terms of margins.
Okay, 11 to 12% in FY24 in terms of margins. Got that. Mehul, hi, good morning. Overall, the numbers have been weak in the quarter gone by. And you have mentioned that there was port congestion challenges. There was unavailability of containers, which sort of restricted your earnings as well. Is that something that will continue in Q2 and Q3 as well? And what is the outlook for the full year in terms of top line growth?
So typically, as we've always said, Q1 tends to be soft for us, and then it picks up from Q2 onwards, and then Q3, Q4 tends to be the big quarters for us. So if you look at end of Q1, we are sitting at an order book of about close to 365 crores in Tega and about 150 crores in McNally Sayaji. So with the order book looking as healthy as it is, we feel that the guidance of about 15% growth in FY24 in both the businesses will remain strong.
Okay, all right. So last year you did around 1,214 crores. Of 15% growth out there would be close to around 1,400 crores in that vicinity. And on top of that, X of it as well, you'll have McNally's 200 crores. So in all, you'll do around 1,600 crores. Is that correct?
Yeah, if you do the math, yes.
All right, so 1,600 crores. And what about the margin trajectory as well? I think you have been guiding for around 21 to 22% approximately. Now, McNally will grow, but as you mentioned, margins are relatively lower. So,
so the margin mix is separate.
Yeah, go ahead.
So the margin mix is different between the consumables business and the equipment business. So as in the consumables business, of course, we hold the margins of about 21 to 22%. And in the equipment business, it will be closer to about 12%, as I mentioned.
And equipment business as a percentage of the total mix is how much McNally adds to it, but as it is, you would have some part of your business in the equipment
So McNally
business.
is the equipment. McNally is the entire equipment business.
That's
for us. Yes.
Okay. So on a blended basis, still 21% is doable? Blended both together?
Yes. No. So just on the Tega piece is about 21 to 22%.
Got it.
And the McNally piece will be about closer to 12%.
Okay. McNally is 12% and Tega is 21 to 22% on margins. Got that. You have some expansion plans in Chile as well. Can you tell us a little bit about that? What is the quantum? How much are you expanding and by when?
Yeah, so we're just awaiting, local regulatory approvals for starting construction. So the land acquisition and everything has been done. We're hoping that by Q3 of FY24, we should commence construction. And if that be the case, then FY25 first quarter, we should go into commercial production.
So once you go into commercial production, then what is the kind of revenues that you would expect from that expansion?
So it's a greenfield project where bulk of the capex is more into infrastructure, not as much on capacity expansion. So, but with the capacity that we're putting in, incremental revenue will be about closer to $30 million on a year-on-year basis.
Okay, all right. Mehul, the street was very excited about Dynaprime. How is that doing? How much did it contribute to the total revenues in the last year? And in this year, how much will it contribute as well?
So Dynaprime is growing quite healthily for us. I mean, last year it grew about close to 28%. We're looking at a healthier uptake in this year as well. We recently announced a large order that we got from a customer, which includes Dynaprime sales to them. It's a 5-year contract, extendable by another 2 years, and that's going to bring in another significant impetus to the entire Dynaprime story that we've been saying right from the start.
What is the contribution? It used to be, I think, around 30% of your revenues. Is that correct?
So the mill business is about 70% of our revenues. The non-mill business is 30% of the consumables business, and Dynaprime continues to be about 30 of the 70.
So 30%.
Okay, all right. Mehul, thanks a lot for joining in. Appreciate your thoughts here. That's Tega Industries with their business, their expansion plans and the way forward.